Welcome back, and joining us on the show now is Vandana Hari. She's founder and CEO at Vanda Insights. Vandana, thank you so much for joining us. Must be difficult times tracking this market, especially with the latest attacks on Kyiv and the way the crude prices have reacted. This whole fear about escalation of conflict within the Middle East or West Asia, how are you reading into it?
Good afternoon, Manisha. So certainly the Ukraine and the Gaza wars are two key areas the market is keeping an eye on, more for the potential of supply disruptions rather than what I would call a fear. And certainly there's no expectation as such that there will be a major supply disruption. So if you look at the activity in Brent and WTI futures over the past half an hour or so since this news broke out of Russian attacks across Ukraine, Brent crept up to about 1% higher compared with Friday's close, and was followed right after with quite a bit of sell-off. So it couldn't really hold on to all those gains. So what is happening here, Manisha, and we can talk separately about Gaza because there's hardly any risk premium on account of that either, despite a worsening situation. What's happening here is, as unfortunate as it is, Ukraine is not a supplier. Over the past 2 years, it's not even no longer a conduit for Russian oil and gas supplies to Europe either, because all of that has been phased out gradually. So I think what the market will be watching out for is how does Ukraine retaliate, and especially does Ukraine retaliate against energy infrastructure in Russia? That would be something that would, I would say, have market participants on the edge of their seats.
Oh, absolutely, yes. While there are supply concerns, Vandana, and we've seen plenty in the last few months, if not last couple of years, though, it clearly does boil down to the fact that we haven't seen oil actual supply getting disrupted, even as it's taken longer time because of the way the Red Sea has been going on as well. How would you look at the overall supplies right now? And if you had to add a premium or a percentage on what we are looking at in sense of a supply concern going forward, what would that be?
So there isn't really, you hit the nail on the head, Manisha. There hasn't been a supply disruption. So whether you look back 2.5 years of the Ukraine war, the worst was when all the sanctions and the embargoes against Russian oil were imposed by the Western countries. And there was a bit of turmoil in the markets until Russia found alternative markets, right? And once that was done, which was pretty much in the first year itself, but 2022 end, Russia had found other outlets for its oil and gas. Once that was done, the market was quite relieved, and there hasn't been any fear of, because ultimately it's just rerouting, but the amount of oil and gas coming into the global market remains the same. So that remains the base case. That is also the case with the Gaza war. Again, escalation of tensions, escalation of rhetoric. But, the base case is that the powers that be in the region are, they flex their muscles. It's a show of force when they attack, whether it's the Hezbollah and Israel or whether it's Iran and Israel. But they make sure that that they don't do anything that, pushes things into a very sharp downward spiral. So the base case for the market is that there is not going to be a major supply disruption. Of course, that can turn out to be wrong. That can be a rude surprise. But I think the market will wait for such a rude surprise to happen to actually start pricing. And as of now, to answer your question on risk premium, I would say there's negligible supply risk premium in crude.
Okay. Vandana, also, when you look at the demand itself, that has been on the weaker side. So while the supplies have been declining, I mean, we've seen U.S. inventories data decline. If you look at the global inventories, they are 4% below 10-year average. But then it is the demand which is not so strong, impacting the prices.
Yeah, absolutely, Manisha. So I wouldn't say inventories are very low either. Concern for the market right now. Three major consuming regions. So whether you look at the U.S. and, let's put aside cyclical rise in demand, which happens over the summer months. But that aside, US is more or less flatlining demand growth. So is Europe is actually negative year on year, way past its peak consumption, historical peak consumption. As is China. China, especially for the oil market, is a major drag. They are struggling to inject momentum into the economy. Their crude imports were lower year on year in the first 7 months of the year. So that's, environment of sluggishness when it comes to global oil demand.
Okay, all right, Vandana. Thanks very much for that. So definitely keeping an eye in terms of additional developments which are going to take place in Ukraine and post this attack which has taken place by Russia, and what kind of impact it could really have on Brent crude prices as well as other commodities. Well, on that note, we need to wrap up on the show. It's a wrap on Halftime Report, but stay tuned. This is Lunch Up Next.